Hey guys, Whitney here. Welcome to the Passive Investing Made Simple Masterclass. I'm your host, Whitney Elkins-Hutten, Director of Investor Education here at passiveinvesting.com. And I'm excited that you are joining me today. You're taking the time out of your very busy Tuesday to join me in investing, not only time here with me, but in yourself to develop your skills as a passive real estate investor. Now, today's topic, we're going to dive in how high net worth investors build trust. And especially when they're evaluating operators and deals, that way they can do so with confidence. So really, when we're looking at, just interpersonal relationships, what do you need to have a good, solid working relationship with anybody? The foundation is trust. If you've never read Patrick, Lencioni's work, The Five Dysfunctions of a Team, one of the things he really builds everything off of is that you have to have a level of trust with whoever you're working with. It can be your spouse, it can be your child, it can be your operator, right? So how do we get to building that level of trust? Well, before we dive into today's topic, if that is what you're here to learn about, you're in the right place. But of course, if you are looking to turn your your active income and savings into passive income and long-term wealth, you're in the right place. Maybe you've tried investing in passive real estate before, but just couldn't quite stay focused and actually make the investment. Maybe you invested in deal and realized, whoops, I kind of pulled the trigger a little too quick and I didn't have all my ducks in a row. Or maybe you're just wanting to level up and build your skills. If that's you, you're in the right place. Because we do this webinar live every Tuesday to help you overcome those issues. Now, if this is the first time you and I are meeting, my name is Whitney Elkins-Hutten. I am the Director of Investor Education here at passiveinvesting.com, but I've been in real estate since 2002. I've scaled over $850 million passive real estate active and passive real estate portfolio, invested in residential real estate, express car washes, real estate debt, have done the fix and flip. I've written about my journey in my book, Money for Tomorrow, How to Build and Protect Generational Wealth. But what I am passionate about is spending my time here with you. My passive real estate, or I should just say my real estate portfolio in general, it's cool to have the net worth build. It is cool to have all of those numbers. It looks nice and flashy on the screen. Okay, but it's really in service of a result that we are probably, both sharing together. We want to have 100% control and choice on how we spend our time. A lot of people, when they start getting into passive real estate, are like, hey, I want to have financial independence or financial freedom, or maybe even absolute freedom. But that financial piece is a tool to get the other freedoms in life. That is freedom of choice, freedom of time, freedom of location, freedom on how you make the impact in the world. And that's what I love doing here at passiveinvesting.com, as well as my work with Ash Wealth and in my book, Money for Tomorrow. And we can help you hit those financial goals. We have over 381 million deployed in the debt side of our business. We have 1.4 million in equity assets under management and have made over 51 million distributions to our investors. And so if you're interested in learning more, wanting to get priority access to our open deals, maybe even getting, having a one-on-one conversation about how we can help you meet your financial goals so you can hit those other freedoms in life, go to passiveinvestingwithwhitney.com. There you'll get all that and more. So let's dive into today's topic. Okay, now we aren't going to talk so much about taxes or money, dollar signs, so to speak, but everything that we go over is educational. So make sure that we're not giving you financial advice, legal advice, tax advice. So if anything in here is construed as that, make sure you take that back to your investing team prior to making an investment decision. All right. I already laid the groundwork for you for today's conversation. We are looking to build trust. How do we do that? Now, part of that is, how does the operator, the person you were looking to work with, how do they present themselves? Are they professional? Are they transparent? Are they honest? Are they authentic? Do you resonate with them? Okay, but the other part is on you, right? There's two people in a relationship, takes two to tango. What do you need to do? What questions you need to have asked and answered for yourself in order to get to that level of trust that you so deserve as a passive investor? Well, first, what does trust within an investment actually mean? Okay, really what we're trying to do is to put together a system and methodology, ask the right questions so you can actually have confidence in an operator's ability to execute successfully, right? Are you asking the right questions to actually get at the answer that they can do that? You also need to have an understanding of the market fundamentals and how those market fundamentals, where are you in the market cycle? What market are you investing in? How do those two things line up with your actual investing goals? All right. And then once we have our understanding and how we're working with the operator, we understand the market, right? We're going to pick these apart a little bit in more detail here in a minute. Then we're going to validate the assumptions of the deal. Okay, so you're looking at this beautiful offering memorandum. We want to make sure that we're validating all the assumptions that are made in the deal structure, and that they're going to help you meet your desired outcome. If you can answer those 3 points, you're going to move past investing in a deal based on a gut feeling and actually have a systematic process that will, it may not guarantee you success, right? Nobody ever should be saying, I guarantee you a return. I guarantee you success in this deal. But you should get very close to that elusive word, guaranteed. All right. So the stakes are pretty high for investors, right? Because there's a lot of common pitfalls that we can, step into. Now, if you're looking at my screen and you're wondering, why is there a golf ball in the sand? That's a sand trap, right? You can either hit the golf ball straight down the fairway. Guys, I don't play golf, so if I get a little off in my details, forgive me. Or you can actually go just a little to the left, a little to the right, and then you end up in a sand trap. But what we want to do is set you up with a systematic process to where you can get to the answering that foundational relationship question about trust with an operator, having a level of confidence, but also setting you up to where that next investment you do is not costing you a significant loss. All right. So what are the pitfalls? Where do investors tend to go a little bit off the rails with their investing? Okay. And guys, I'm going to be the first to raise my hand. I have made a couple of these mistakes myself. Okay. So if you're a new investor, right, you're ahead of the game. You know what the landmines are and so not to step on them. If you have been in the game long enough, I'm sure at some point in time, you'll look backwards at an investment that went sideways or south and go, yep, that was the pitfall that I fell into. So what are the common pitfalls? One, trusting an operator solely on the word on the street, the reputation, okay? You have to get to know somebody, right? Even if it's just jumping on 1 or 2 one-on-one calls, get to know them, get to know the team, ask your questions, dive in further, go to a conference, shake their hand, look them in the eye. If you're in town, if you're traveling and you're in town, go see one of the assets that they've owned. Go to their office, meet their team, okay? You're going to get a lot more insight when you just spend a little bit extra time to get to know somebody. All right, common pitfall number 2, being seduced by strong market data while ignoring the operator's performance. Meaning, you look at this beautiful offering memorandum, it's got amazing returns, and then you're just like, ooh, that deal is going to help me meet my cash flow goals or my equity growth goals or my tax benefit goals that I have. And then you're just like, I don't really know this person, but my buddy said they were great. I see them. They have like a nice reputation on the forum. They have a beautiful website. And you just bypass all that market data that's in front of you. Okay. Just to make things easy. And then the last point is overemphasizing the returns without actually questioning the assumptions. And this is usually, I see it most often with new investors that are coming from stocks, bonds, and mutual fund investing. I can hop on a call with them and their first thing is they're like, okay, just tell me the returns of this particular deal. And I'm like, let's take a beat. Let's get to know each other a little bit, make sure all of our goals are aligned, make sure that, what we have to offer is going to fit what you need. And then we'll talk about the returns on the deal, okay? Because an amazing operator can take a questionable deal and steward it to success. An amazing operator can also navigate tough and challenging times in the market, where somebody who is untested or unchallenged might, have a little bit of a struggle, right? Now you're going, well, Whitney, I I I have a big long tool to help me get at this, but it just takes me so long to underwrite every single deal that gets to my inbox. Well, our first level of trust is sorting out those deals, those relationships that we really shouldn't be in relationship with. So we have to have a good screening process. Think of it as a sales funnel, okay? You're gonna have a deal funnel, right? You're gonna put all these deals on the top, we're gonna take it through a screening tool, and then you're gonna be left with just a handful of deals that you're truly gonna underwrite, okay? But here's the thing, just because we have a screening process, do not mistake the screening process that we're gonna go through here in a minute for due diligence. Because if you skip the actual deep dive due diligence, it can be super costly and lead to loss, right? And I've got a couple of examples for you, okay? One is the lesson I learned the hard way. I trusted a smart friend's judgment. A smart friend of mine who is amazing at due diligence. We were both looking at the deal at a particular time. He had all his fancy spreadsheets. He shared them with me. I just read through his due diligence and skipped my own normal due diligence process. Now, here's the thing. The operator at the end of the deal ended up failing to deliver on the projections, and there was actually some really poor outcomes, legal outcomes that could have been entirely avoided. But here's the kicker. Had I just gone through my own diligence process with that particular deal, I would have asked some vital questions in my own diligence process that probably would have kept me from investing in the deal because it didn't line up with my goals. So the lesson learned here, even smart people make mistakes, okay? But more importantly, let those mistakes be your own. So don't delegate out due diligence to somebody else. Whereas if you have a powerful screening and due diligence process and you follow it, you're going to be setting yourself up for, greater chance of success. So there have been plenty of deals in my portfolio where I've followed my own process of, meeting the operator, validating the market, analyzing the numbers, ensuring the deal actually met my own investment thesis, my goals, my risk, my timeline, all those pre-answered questions I had about a deal before I went into it. And the result there has been, perhaps stronger returns, okay? Because I actually trusted the investment process, but more importantly, I had greater confidence that deal was going to be, better aligned with my own investing goals because I followed my process, okay? I took the time and did it. So a thoughtful process leads to confident decision and, quite honestly, more times than not, better outcomes. So guys, if you're here live, I want you to jump over to your chat box. Would you invest in this deal? Somebody comes to you and says, the market is great, the projected returns are strong, and this deal matches your goals, but you don't know the operator. What would you do next? Would you write the check? Would you get into the deal? Now we're waiting for some responses to come in. A couple of no's, resounding no. Ooh, but maybe. Why maybe? Well, we got the operator is the most important thing. Know more about the operator. Try to find out about the operator. You guys are on the right track. I love it. The answer is no, but, okay? The operator is the most critical piece of the puzzle. Okay, without their trust in their strategy, experience, and execution, the deal is, quite frankly, It's not a dud, it's just incomplete. All right. Yeah, as somebody said, the relationship with the operator lasts about 5 years. Yeah, so you are now if we go back to everybody's title in the actual operations relationship. We've got the general partner, they're the ones doing the work. Then we have the limited partner. What is the key word here? We're partners. Okay, we are going to make money together, and, if it's challenging times, we're gonna, navigate the situation together. Okay, but the key word is partner. So your first step to building trust here is actually, again, building that funnel. So I want you to, understand how to put together a screening process that's gonna lead the right deals into your inbox, and quite frankly, keep the ones that you shouldn't be looking at out of your inbox. Okay. So this funnel process, one that I use, is going to help you focus your time on the 20% of the deals that could make it into your portfolio. Saves a lot of time, saves a lot of energy, but more importantly, because you have this nice screening process in place, you're getting to be in more intimate relationship with the operators you do want to work with. Okay. So, the first thing here that we want to do is start with the operator. Okay. We want to build this trust first. All right. Now, this is not a substitute for full diligence. Right now, you're going to see some of these questions probably are, a little bit redundant, and they're probably on your full due diligence checklist. But these are the top questions I like asking if I have, an operator on the phone for, say, 15 or 20 minutes. All right. What is their track record? Especially in the asset class that you're looking at and the market that they're investing in. Okay. Get to understand who they are, what they've done, what their successes have been, what their challenges have been. Have they successfully managed any deals in challenging markets? I would love that nobody fails. I would love to invest with operators all day long that all they got were A+ on all their deals. But that's simply not realistic, okay? Especially if an operator's been around for the last 5, 10, even 15 years. They have navigated some challenging times, and I guarantee you there's at least, 2 or 3 deals in their portfolio that have experienced some stress. I want to know how they handled it, because I want to be with a person that is not going to bury their head in the sand. I want to be with somebody who's going to dig in and get the job done for their investors. Okay. How transparent are they about the risk and past performance? Okay. This is where I think a lot of investors start kind of dancing around the questions, because nobody wants to talk about the elephant in the room. It's been a challenging market for the past 2 or 3 years. As an investor, as a limited partner, that is a question that you should be asking an operator on the call. Okay, hey, point blank, what are the risks if I invest here? Tell me what the risks are of the investment. And 2, I want to know what deals in your portfolio have you had issues with. Tell me how you navigated it. Okay. Point number 4, are they personally investing in the deal? Okay, this can, signify that maybe they are financially aligned with you. They've got more money at stake. They believe in their own deal. Okay, I think doesn't necessarily, de-risk the deal in a huge way, but it is a nice feather in the cap for the deal. And it's something I do look forward from my operators to be able to move the deal further down the funnel. What is their investment strategy, and how does it align with your financial goals? This is a very important question. Okay, this is where I know a lot of investors get really starry-eyed by returns, and they ignore, does the deal actually fit with their goals, their risk, and their timeline? And so that is something you can actually ask the operator. Okay, based on your investment strategy, here are my goals, here's my risk tolerance, here's my timeline for investing. What do you think it's a match? Right? Ask that of the operator. Okay, if all those things kind of check out on a high level, and remember, you're going to be doing some big due diligence whenever you get into actually looking at the deal. Take care to understand what markets the operators, operating in. Okay, I like going ahead and sussing this out at the very beginning. If I end up on an operator's list and I have an initial conversation, I like what they're doing, I move on to take a quick peek at the markets they're investing in and making sure that they're experiencing growth. Okay, that there isn't any sort of like risk in the area, like a reliance on a single um, job sector or employer, or maybe there's unfavorable regulations that are coming down. And then you also like to take a quick peek at supply and demand. Is this a market where all things are gonna, kind of, stabilize and start taking off, or is this a market where, it's severely oversupplied and it's going to take years for that hyper supply to be absorbed? Okay, I like looking at those three things in the market, right off the get-go, to make sure that I'm aligned and I'm only looking at the deals that match what I want to see. And then we can start getting into some of the projections, right? You should get some sample deals that, either the operator, if they don't have anything open, they're sending to you so you can review, or you're starting to see live deals come into your inbox. This is where you're just going to get a nice cursory overview. Do the underwriting projections, when you open that email, do they seem reasonable? Do the projected returns align with your financial goals? And then, is there an indication of what the plan B is for the asset? Okay, I know the operator is selling you plan A, okay, getting the asset to success, but do they have have they stress tested, the returns and shown you what might happen if there's a plan B or a plan C to exit the asset? Now, these are 3 points that I look at just very cursory in any email before I move that deal further into due diligence. Now, I've talked and referred a lot to about doing full due diligence on deals. And while this particular webinar is not about that, it's about getting the screening process done so you can trust what you're seeing from that operator. If you want to build those skills on your due diligence, get into our Passive Investing Made Simple boot camps. Okay, there we, deep dive in how to vet operators, analyze markets, evaluate deals, really help empower you to, build confidence skills in due diligence. All right, guys, if you're here live, don't go anywhere. We're about to start the Ask Me Anything part of your show. But if you're joining us on your favorite podcast player or on YouTube, this is your call to action. All right, you can join us at passiveinvestingwithwhitney.com. There you get priority access to our top deals. You can jump on a one-on-one call and learn about how we can help you meet your investing goals. All right, if you're here live, don't go anywhere.